So today I'm doing my stocks I'm buying November 2023 edition. This is where I go through the stocks that I've been buying from the 1st of October to the 1st of November. And I do this series every month on the YouTube channel to keep the transparency so you guys know what I'm buying, know what I'm selling. I'm not buying anything quietly in the background and then when it goes up going, oh look, it's up so much and I've never talked about it before. Or I'm not selling, I've been talking about something and I quietly sell it out in the background and hope nobody notices. This is where I talk about every move that I've made in the stock market in the last month, and I will do my UK one in a few weeks time, because well, probably in a week's time, because I know a few of you guys also watched that video as well for the UK stocks that I'm buying and selling, so don't worry, that is coming sometime soon. But just to let you know as well, by the time you see this video is actually pre-recorded. I should be in actually America, so I won't probably be able to record that many videos while I'm there. I'll see if there's something potentially I could do, or if I do get any spare time. But if you don't see any videos from me until probably around Friday or Saturday, that's the reason why I'm not been posting, so don't worry. But anyway, let's get stuck onto these stocks that I've been buying or selling. As always, smash that like button, and if you're new around here and find this video helpful, please subscribe. Let's get started. And if you do want to know what I'm buying and selling in real time, the place to be is on the Patreon. I post my live buy and sell alerts on there, and I also give 2 exclusive videos a week, apart from this week though, because I'm not here to do 2 exclusive videos this week. And as well as that, there's a Discord with 500 members on to talk about stocks. So if you do want to support the channel, join through the link in the description. It's only £5 a month, which isn't that bad when you consider the 2 exclusive videos a week you get and the Discord. And it helps support the channel as well if you do like the videos. Also get some free shares on Trading 2 and 2 worth up to £100 with a link in the description. But let's get stuck onto the first stock, and it's Pinterest. And it's not because I'm buying, it's because I've sold Pinterest. Now, the reason why I sold Pinterest is a stock that I've held for around about 5 years now. First started buying this after the IPO. The stock went up a big chunk during the CV, one of those CV stocks that benefited massively. It was a stock that was up, I think, over like 300-400% on at that time frame. And I did sell off around about half my position in Pinterest. And then since then, the stock has been having a bit of a reality check on the share price. Has started going back up again since around 2022. And I was up about 20% on this position, and I have sold out of this stock. The reason why is I bought 2 brand new positions that I made full videos on earlier, I think this last week and the week before. So I will mention them in this video because I did buy them obviously in the month of November. But I sold it just because I didn't really like the direction the new CEO was taking the business. Felt like the profitability should be a lot higher. I think they should be pushing towards a meta style profitability, which they currently are not doing. And I also don't like how the stock-based compensation has massively gone up as well since the new CEO came in as well, which I think is taking the mick out of shareholders a little bit when you aren't focusing on profitability as well. So I looked at the valuation and I thought, you know what, I see better opportunities out there. So I thought, you know what, we've made good money over Pinterest on the last few years, and now let's go use it in other opportunities. The first stock on the list for buying though is Inmode. So I have been buying some shares in Inmode. I made a video not too long ago saying I don't know if we'll ever see this drop more than probably below $30 or something in the sort of range. And the stock market, guys, anything can happen. Boom. The stock has lost half its value in 3 months. And I can tell you, there's nothing that justifies the company losing half its value in 3 months. It was already relatively cheap. The fact that it was already cheap and then lost another 50% is absolutely bonkers to me. And I think this is crazy now that we're talking about Inmode. It's actually the same sort of price as it was before the whole CV dip. In fact, it's lower than where it was in the CV dip. So that's absolutely bonkers. In case you don't know, they make non-invasive cosmetics for your face, body, skin, which is obviously very popular because everyone's more conscious about the looks. And obviously people do not want to go under the knife to maybe get these appearances, changes to their body to look better. You know, people are more conscious about having to go to sleep or get put under the knife. You go in, get your treatments done, whatever that may be, and then you come out and whatever that treatment will be, whether it's something to work on a certain fat that you want burning off your body or other procedures that they have. If you do have a look at some of the treatments, they'll show you some of the stuff that they do and some of the technology they have. But obviously I think really popular in the next kind of few years. And if you look at the company, I mean, they've absolutely smashed it. one of my best financially performing stocks that I've held in the last couple of years. Obviously started buying in 2020, and you see the progress that they've made on a revenue point of view, from 156 million and now up to nearly 500 million. On a profit basis, 61 million. They're now doing 182 million, and like I say, it's the same level as it was. It's below where it was when I started buying, which is once again, I just absolutely crazy to see. If you look at the financial health of the business as well, very strong. They've got no debt on there. They do sit on 629 million of cash. This year, 203 million of cash, which is just going to be absolutely insane. You're looking at this thinking, the only concern I have is use the cash to buy shares. Now I know that they're actually looking for an acquisition at the moment, and that's why they don't want to spend the cash. But I think when your shares are this low, you've got to buy some shares. That's my only criticism of Inmode, but very good balance sheet, great profit, and when you look at the valuation, it's absolutely crazy. The reason why it's down so much is obviously mainly due to the whole Israel and Palestine situation that's going on at the moment. Obviously they're based in Israel, so that's causing a few issues and concerns, even though the company has come out and said it won't affect us. The other thing is that they did say they have seen some weakness, which is not like Inmode to say that, but obviously, these devices that they make do cost a lot of money to buy them. A lot of them get it on loans, and obviously loans have increased on interest rates a lot, so it is going to cause some slowdown on the company. But the last quarter, they downgraded the guidance by 30 million. So you can see here for the full year they expected 500 to 510 million from the previous guidance of 530 million to 540 million. So they've downgraded the guidance by 30 million, and the relation to that is that it's had 1.5 billion of its market cap wiped off it. It's crazy. 1.5 billion market cap wiped off of 30 million downgrading the revenue. It's absolutely insane. And then you start looking at the metrics it's trading at now, and you're looking, it's 1.7 times revenue to total enterprise value, which is normally nearly double figures. EBITDA is down at a 3. Normally it's at least in the teen range. You look at normalized earnings, it's around about a 7. Normally it's in the 20s, and I think even 20 is low for a company that's doing the numbers that they've done. So yeah, absolutely crazy there. So yeah, I think Inmode is a very good opportunity at the moment. Next one is Celsius. So I made a dedicated video to Celsius, and this is one of the stocks that the money from Pinterest has come from and gone into Celsius. Did buy into Celsius, a stock I used to own. It was a stock that I was up over 100% on. Sold for some of my shares for 100% profit, and some a little bit less than that. But it was a stock that did join the 100% club once again, and I did buy back in. I sold out because I was a bit concerned around the international growth, which they have now fixed. I sold out because I was worried about the competition of Prime, which I'm now not worried about because I look at it and I think it was just a bit of a hype that was going on at the time. I think the hype's died down, and realistically it's not as popular as Celsius. And the other thing was the balance sheet, which they've strengthened up massively since they've had a deal, because Pepsi bought a stake in them, because Pepsi going, these guys are going to be major energy players, we need to own a stake in them. And that's obviously really positive. Pepsi buying a stake in you. The company itself, obviously, sells these energy drink products. I've had them. They're very good products. They're very different to the likes of Red Bull and Monster. They're a lot more light tasting. They don't have a horrible aftertaste. You don't have a really big high and a really big come down after having one of these. They're kind of a drink that you feel like you can enjoy and feels a lot healthier to have. And actually, when you do look at the ingredients themselves, they are a lot healthier than the likes of a Red Bull and Monster, and that's probably why they're taking so much market share from them. And if you do look at the company, the growth has been very good from a revenue point of view and should continue to grow rapidly. And from a profit point of view, the profit is ramping up massively as well. So it does look a little high on the valuation, I agree. But once this growth starts kicking in, that valuation will drop quite a bit. And also the other thing to consider is that I'm happy buying here a position, and realistically, then I see if it drops. If the stock drops to $130, $100, then I can buy a big position up. And that's exactly what I did last time with Celsius. So we'll see what happens. The other stock I used the money from Pinterest was into LSAC. Once again, made a dedicated video on this one. Once again, a stock I used to own. Bought it at the start of, I believe it was this year or the back end of 2022. Made a 25% return on it. Sold it out because I saw interest rates just rapidly going up, and I thought this is going to affect the business. Since then, it looks like the stock is priced in them higher interest rates because it is down 50%. So very good move there to buy and then sell, and then obviously buying again, a lot cheaper after these higher interest rate environment has kicked the share price. In case you don't know, LSAC, they do these sofas here. These sofas are very popular because compared to traditional sofas is that you can easily change the covers, as you can see in the video in the background. So if one gets damaged, if one gets spilt on, easy to clean, easy to change. If you want to change your sofa from a blue one to a pink one, you just go out and buy new covers. If you want to buy a new sofa design, you don't have to go buy a new sofa. You just go to the shop and you add in these extra parts of the sofa or these tables, which is obviously really useful if you just want to add in an extra, make it a bit bigger. If you want to change the shape, you can easily change the shape. You just, as you can see them all clicking in, you take them out. They've got patents on this as well, which obviously really helps. And this is why the actual customer base is I think it's around about 50% is repeat customers, which you don't normally say with a sofa company, but it's repeat customers because everyone keeps going in, buying the sofas, changing the design, changing the style, add more in, and it's very very unique, and I think that's very, very popular for the next kind of few years as people become more conscious about reusable and not having to pay for a new sofa every time they want a change of colour or a change of design. The big thing I had was the worry around, is this company going to get killed in the higher interest rate environment? And they're actually still doing okay, and this is why I bought in. I think it could be a tough 12 months in this higher interest rate environment, but I look at the moment and they're still doing pretty well. You look at the sales are still going up. I think in the last quarter they grew 154 million compared to 148 million on the year earlier, beating expectations. Gross margins were up to 59% compared to 54%. So yeah, you look at the company here and for this is supposed to be the worst time for LSAC, and the numbers are still very good. So you imagine what this company's going to do when we're out of this environment 4 or 5 years down the line. And that's why I'm picking up some shares at the moment. PayPal. So PayPal obviously reporting this week, so I'll keep this one nice and brief because obviously the information can go out of date very quickly. But obviously, I mentioned this the other day on the earnings preview, is that I think this is just crazy cheap. 14 times earnings for a company like this. Obviously, new CEO coming in, which is exciting as well. You look at the company, great track record of revenue growth. When you look at the past performance, revenue growth, profit growth has been going up. You look at the financial health of the business. Very healthy balance sheet, sit on 53% debt to equity, sitting on 9 billion of cash. So they're also buying back a ton of shares as well, which obviously a really big positive. All fintechs are being killed, but I think this is just getting absolutely ridiculous. The numbers that they've still been putting in have been good, and it's going down, which is just stupid. You look at historic valuation, 1 times total enterprise value to revenue. It's normally, above a 5. Total enterprise value to EBITDA, it's a 7. Normally it's in like at least a teen range, which is just absolutely insane. So yeah, PayPal, obviously you guys know I've been talking about this one for a while. I've been buying some more shares in some PayPal. Next one is Hims and Hers. So been buying some shares in Hims and Hers. This was the last buy I actually made in the last few weeks. I think it was the last week that I bought some Hims and Hers. I was a stock that I bought during 2022. It was just incredibly cheap, and it went on a run to $12 only, believe it or not, just earlier this year. And I remember selling out for over 100% profit on Hims and Hers, and I was like, I think it might have a pullback soon, and I was thinking it might pull back to like maybe $9 or something like that. And the fact that we're now back at $5 is just absolutely insane. And once again, it's another stock that you look at and go, why are you down? Like, there's no reason for this stock to be down at these sort of levels. You look at the last, by the way, they're bringing out earnings on the 6th of November. I get asked that quite a bit. So I'll probably do a video once again on these guys' earnings, as well as maybe DraftKings earnings on either the Friday or Saturday, once I get back from America. But when I look at the numbers in the last quarter, they were absolutely amazing. Like, the stock even jumped on the earnings. Like, it was up 13%. And then on the day, I don't know if you guys remember, the stock then went down. It went down like 10%. It had like a 20+% on the swing on the day, which is insane. And the quarter was just insane. Like, the numbers were so good. The losses once again improving. The revenue was up 83% year over year. I've not not seen a company do these sort of numbers before. Like the drive up in revenue, drive up in profitability. I mean, analysts are forecasting them to actually lose money next year. I think we could see them actually hit profitability next year. And you look at the rate that they're growing at as well. I've never seen a company like this, a growth company, trade this cheap before. Financial health wise as well, really good balance sheet, and no debt on there. Sit on 193 million of cash, which is obviously really good as well. Founder-led company. The founder does own a ton of shares. He's the biggest shareholder on 9.5% as well. And it's only a company that's existed for 6 years and it's doing these numbers. I don't know what's going on with this one. It's come out with a 10 out of 10 earnings report, and then since then, the stock has been, since the 7th of August. I'll go from the 4th. So yeah, you see it's down 30%. It's absolutely insane. So yeah, I bought some Hims and Hers as I think they're on fire, and I think it's gone back to crazy levels again, which is unbelievable to see. I did pick some shares up in Walgreens. This has been struggling recently. Obviously, a lot of situation going on with the CEO, but I think Walgreens, obviously, it's a turnaround play, so there's risk that it doesn't turn around, which is why it's so cheap. But I think at the moment it's priced in a lot of that risk. Obviously, the dividend yield is 9%. Obviously, that might get cut, but obviously that's nearly the S&P's average return right there. New CEO is coming in the 23rd of October. So obviously the last CEO, clearly the board wasn't happy with how she was doing, and also probably the share price showed that as well. So they have got a new CEO in again, and hopefully he can start turning it around. But I mean, with Walgreens, they've got the locations. They've just got to start managing the locations and trying to drag out the big profitability in them, and that's a big thing. In the last quarter, they still grew 9% year over year, I think it was, which is still absolutely amazing. But the big thing is driving up profitability. That's what everyone's looking at. If they can drive up profitability, that's where it turns around. And in the last quarter, the stock actually went up on the earnings, even though they missed on the profitability numbers. But the Wall Street was still happy with the profit that they are driving up and improving. So a bit of a strange one there, that it was a miss, but they're still happy with the improvement that they're making. I mean, maybe the fact that it's kind of now at the sort of levels where it's this low, that's priced in a lot of that negativity there. But yeah, I mean, that's the big thing. They just got to they got to improve that profitability, and if they improve that profitability, then the share price will do well. It's just if they can do it, they've got the growth there. They just got to make sure they drag up the profitability now, and it should do very well. So I did buy a couple of shares in Walgreens as well. So that is the full video for the month of November and the stocks that I'm buying. Hope you enjoyed the video as always, guys. If you could, smash the like button. If you're new around here and you found this video useful, please subscribe, and I will see you in a few days' time.